Good evening.
Good evening, madam.
Hope all you can hear me. What happened to your presentations today? Financial reporting one and the other one. Have you
Postpone.
completed it? Postpone.
Yes, ma'am.
Right. So then, can we conduct our quiz? The financial business finance quiz,
What quiz, madam?
midterm quiz that I have already informed you. Can we conduct that one today?
Madam, how many quizzes?
How many?
Miss, it's come from which lessons, madam? All the lessons.
I didn't get your question, but yes, please again.
Which lessons, madam?
I told you, Nandala, before the last week, I gave you the instructions, no? First lesson, second lesson, third one, fourth one, and the fifth one. This can return also. Last week, I supposed to do it, but I didn't do it because there are some students who were participating for the extracurricular activities. That is why. And then this week, I gave you the instruction before the last week, the way how we are conducting the quiz. Some of the batchmates are asking about the extension for the quiz, but I didn't given that one because I know that in this week you are going to have the lectures on online mode. Therefore, I for sure I know you don't have the in presentations, even you are supposed to do it. I know that I are not going to have the presentation in this week. That is why I didn't postpone that one because so then in the next week definitely we might have several uh, pressures from the other presentations also, right? Next week අපිට අනිවාර්යෙන් presentations ඔයාලගේ අනිවාර්යෙන් presentations ගනි මොකද හේතුව next week එකේ අපි යන්නේ ගොඩක් කලාට online method එකේ නෙමෙයි මේ week එකේ නම් අපිට online යන්න වෙලා තියෙන හින්දා මම දන්න හින්දායි මම present ඔයාලගේ quiz එක ටිකක් postpone කරන එක නැවැත්තුවේ. So then can we go with the quiz? Once I have the part to cover from the portfolio analysis. So then once I conducted that part, so then we can go with the quiz. Is that possible to you all to reach for the quiz account, the finance quiz? Amount instructions දුන්නා නේද? Yes. No one is going to answer for me. Why is that? Okay. Anyway. Right.
Hello, madam.
Yes, Pata.
Madam, can you please briefly explain about this the quiz? Little explanation how to do it. I mean, it's like a same for like a previous LMS uploaded quiz.
Yes, yes.
Okay,
මම
madam.
ඔයාලට
Okay.
මුකුත් කිව්වේ නැද්ද quiz එක ගැන?
No, I can remember,
No,
madam.
madam, you
Yeah,
told me just a quiz.
last week or before last week, you already told us that you will give us the quiz. You will start like same as before. So that's the only
That's
thing.
it.
Yeah.
Okay. So for the quiz, why I'm doing that one, because the plan that I have taken to conduct the weekly quiz, that was unsuccessful, no, because some of your students are asking the claims once they are not able to present for the lectures, they are asking again several excuses and other things. That is why I was supposed to conduct this quiz. It having 10 questions, right? 10 MCQ questions from the lessons that we have conducted so far. MCQ means there are 4 options, right? 4 options, and then the question from the introduction, and then the financial system, and then time value of money question also there, and then the bond valuation, security valuation, and the last one, the what do you call risk and return. So these are the lessons, right? Out of from these 5 lessons, I'm going to ask 10 questions, right? For one question, 1 mark. So then you have been allocated 10 marks for the quiz, right? And then the important thing is, now is that clear? ප්‍රශ්න 10යි මේ lessons පහෙන් තමයි ප්‍රශ්න 10ම හැදෙන්නේ. MCQ questions, short questions, and then short answers. The calculations are there, but only there are, I hope, 2, 3. So you are receiving the question from the question bank. So therefore, I can't directly say that all the 10 questions might be the calculation questions. So there are some 2, 3 theory questions also from the financial system lesson and the introduction lesson also. Right. Can we do it today? If I yes, very good. If I postpone the quiz, what happened? You are getting the overloaded with the other. If I'm going to postpone, I will definitely cover the cost of capital and other lessons to that quiz also. That means the depth of quiz will be high if we are postponing the quiz. That's the reason. Otherwise, I can postpone, no any issues. And quiz එක postpone කරනවා කියලා කියන්නේ lessons උගන්නන වැඩි වෙනකොට මොකද කරන්නේ? මම ඒ lessons වලට question එකක් දෙකක් දානවා. Okay, right. So first we'll discuss the lesson today, the remaining part of the portfolio valuation, and then we'll go to the your quiz, or else we'll go to the, if not, if you are unable to do it, you take you discuss it as a batch, and then you come up with the answers. If you are unable to do it today, we'll go to the next lesson, the cost of capital, and after the break, right? Anyway, for the moment, we'll start the lesson, the portfolio valuation. Can anyone tell me what is the point that we have stopped in the last week? Yes. What's the last point that we have discussed in the last lecture? Yes. We have calculated the covariance. Am I correct?
Yes, miss.
Yes, we have calculated the covariance, and then what else did we have calculated? Only covariance. We have identified the expected risk and return, and then the coefficient of variation also. Am I correct? No one is going to answer for me. If you are not going to answer for me, that indicates you are not at the proper environment. Or else sometime you might in a separate place and you are not engaging with the activities or the uh, studies here. That's the thing, but unfortunately, we have to conduct the risk and return lesson via the online mode, which is a very important one, right? So therefore, I request you all, if you are not if you are not in a proper place, proper environment to study, uh, if you are moving from that place for the study environment, that is better for your examination purpose and as well as the studies purpose, because this is really important lesson. වැඩ කරන්න නැති තැනක ඉන්නවා නම් මං හිතනවා වැඩ කරන්න තැනකට આવොත් හොඳයි කියලා. Sometime even it might be in the physical lectures, since it is the first time, since it is a new concept to you all, portfolio valuation, it might be sometime difficult, right? So therefore, this is the first time we are discussing it in the online mode. So therefore, if you have to engage with the calculations, otherwise I'm pretty sure you can't understand the concepts that we are discussing about, right? And the last week also I told that the students who were not at the class lecture in the last week, I have done the step-by-step portfolio. I have done the step-by-step calculations for the coefficient, for variance, and then the risk return, the standard deviation, and other things, just to refer the lectures and come. Why? Today's lesson that is based on the last week lecture. Otherwise, if you are weak, or else if you can't understand, or else if you didn't understand the concepts, or else if you didn't study about the last week concept, sometime it might be get the little bit difficult when you are calculating the portfolio risk and return, right? Okay, with that having said that, we'll start the lecture today. The portfolio risk and return calculation, really interesting area in the finance. And then actually we are calculating those risk and return. If we have the portfolios, if you have invested in say 2 more securities, we have to calculate the portfolio risk and return of the investors, right? So therefore, let me share the screen. So this is your last week calculation. Just to recall your memory, we'll go quickly through the what are the things that we have discussed in the last week. And then we identify yes. We started with the example number 3, calculation of average return. And then we have calculated the risk also. And then we identified the risk and return based on the historical data. That is the difference. Initially, we are taking the difference between the average return as well as the actual return, and then we are going to have the standard deviation for all the things. Standard deviation is equal to the risk of that individual security. Right. And then we identify how we can calculate, how we compare the standard deviation and or else risk and the return of the security, and then which is calculated to the coefficient of variation. Right. So once we calculated the historical return, then we move to the expected return calculation. That means in the future, if we have some uncertain scenarios, how we can, under the different economic conditions, how you can calculate the risk as well as return under different economic scenarios, right? Which is identified through the expected return, and then the other one expected risk. Right. What is the specialty here? We have to consider the probability level of the different economic states. right? Under the different economic condition, you have to understand, or else you have to clearly identify the probability levels of occurrence of that economic condition. Under that economic condition, with that probability, you are identifying the type or the returns for the securities, for several securities. Right. If it is so, you have to calculate the expected return and then the expected risk. Now, the specialty in this expected outcomes, expected results, or its expected scenario, we have the probability, right? You have to adjust the probability levels. By adjusting probability levels to the expected return and the expected risk, you can calculate that the entire value for the risk and return for that security. Right. So this is how we have calculated those things. So these are the sum of calculation I did with you all. And then we identify the new thing which is called as the covariance. Right? Covariance. The directional relationship between two variables return or else two stocks return identified through the covariance. Directional relationship, and then we stop the answer with minus 10.71. Right. So that is the end of the first lesson, first part of the risk and return. Right. Now, can you all see the shared screen?
Yes, madam.
Good. Thank you very much. Right. Risk and return part 2. Right. Risk and return part 2. Now we are moving towards something very interesting but new to you. Right. A portfolio. Right. A portfolio. We'll identify what is mean by portfolio first, and then we'll go to the calculation of the return and risk of this portfolio. Right. So what is our expectation is to calculate intended learning outcomes of this lesson. We have to calculate the risk and return of the two assets portfolio, and then we'll just have a discussion regarding the capital assets, capital market line, and then security market line, as well as the capital asset pricing model. We are not going to have a deep discussion regarding those. We'll just have an idea regarding what do you mean by those new concepts to you. Right. Okay. Right. What do you mean by the investor behavior? Are you an investor? Are there any investors in the share market? Are there any investors in share market here at the class? If yes, you can raise your hand so then we can get some facts and figures from you. Yes. What do you mean by investor behavior? Prasangini. Good. Do you have any investment in the share market?
Yes, madam.
Good. I'm not going to ask the amount. What are the shares that you have invested? We'll share their experience with our colleagues.
Yeah, Lanka Aluminium and with this PABC and other one also. Wait, yeah, Pan Asia Bank. There is other one also, Tokyo Cement.
Okay, right. That means you are getting the dividends, and then are you selling and buying, or else are you just invested there?
Actually, 2019, I just, that is for a short-term period. I started for a short-term period profit, but now I invested only, madam. I did not sell recently, and I am purchasing only these days.
You have purchased?
Yeah.
Yes, okay. No any buying and selling process happening at the whole time, ne? Just you purchase and you are keeping for a capital gain. I suppose that you are expecting for a capital gain. Good. Anyway,
Yeah,
I'm
madam.
really happy about you. So at your age, if you have made any investment in the share market, that is really, really good, right? So that is what you need to do in the in this program. So rather than looking at the just numbers, figures, and theories, likewise, you have to apply what you are doing here. So therefore, you all are adults. You all have since it is a weekend programs, you are working in somewhere else and you have some money also. What you can do is you can do this kind of investments, right? So you all are future accountants and you all are going to be very high ladders in this career. So therefore, try to do some investment in the share market. At least one stock, that is enough, right? Okay. So investor means the person who is making an investment, right? We call him as an investor. It might be some real assets, it might be physical asset, right? Sometimes some investors, they are always trying to invest in the financial assets also. Financial assets. Whatever the place, even they are making an investment, we call them as an investor or as investors, right? What do you mean by an investment behavior? That is the allocation of their funds to different assets based on the investment strategies, and then always through the investment strategies, what their expectation is to increase their wealth, right? So therefore, they are which are budgeted shares allocated to the wealth invested in the available shares, right? Just assume you have a 1 million, you want to invest in the 1 million. You have the options. As an investor, you have a lot of options. Some investors, they can invest only the shares. Only shares, 1 million, fully 1 million invested in the shares. Some investors, they can invest in treasury bonds as well as the shares. 5 million treasury bonds and then the 5 million shares. Some investors, they only invested in treasury bonds, 1 million treasury bonds, treasury bills, or else corporate bonds of the other organization. Some investors might be there, they have purchased the land. He is also an investor. Some investors, they invest in new projects. They are initiating new projects, right? So therefore, what do you mean by investment behavior? It is a reflection of the allocation of the investors' funds to different assets, right? When they are allocating their funds among these assets, either it might be financial or as the physical assets, they have some strategies. They have some strategies rather than in our case, for your one, when we are making some investment, we are not thinking about the future. We just make an investment, right? I have the research project, the assignment for you all guys. Previous pages I made them to invest in the real world, to invest in the share market and then have a profit. Why they have invested in the share market? Because of my assignment, right? But ultimate goal of my assignment was I want to make them as an engagement in the share market. That is why I gave them the assignment. Anyway, what they have done, I have asked them to collect the funds 10,000 and then allocating 2 shares. In their end, they had the 10,000. They had identified 2 shares, right? Why they have invested? Because of my assignment. But as a rational investor, why the investors are making their investment? They need to increase their wealth. They need to increase their wealth. Why are the mothers and fathers going to open a fixed deposit in the banks? Why they are purchasing vehicles? Because why? They have some sort of investment strategies. Even your mother, even your father. Sometimes they don't have a very high capacity regarding the financial management and etc. But they are really good at the management, investment, or as the savings behavior, right? they have different strategies. නේද අම්මා ඔයාලගේ අපච්චි අපේ ඒකනේ ෆස්ට්ම concept එක අපි දකින ඉස්සෙල්ලම අපි දකින මේ ෆයිනෑන්ස් මොකවත් ඉගෙන ගන්න කලින් අපි ගෙදර දකින concept එක තමයි අම්මා ඉතුරු කරන විදිය. Sometimes your mothers it might be the working or not working, right? අම්මා ඉතුරු කරන විදිහට තමයි ගොඩක් ගෙවල්වල මොකද වෙන්නේ? දරුවෝ ඒ පාට තමයි යන්නේ. They sometimes they have different strategies, sometimes they not have the different strategies. But in the finance field, investors they have the different strategies. For an example, Dhammika Pereira, right? What is his strategy? When he's explaining in some speech, he told that so once the company is dropping down, once the company share price is going down, he purchased some shares. He acquired the organization. So then what he has done, he has contributed to the company very well, and he restructured the organization, and then once he restructured, now the company is going up. At the highest point, what he is again doing, he is selling the shares to the other owner or other investor. That's a huge capital gain that he can earn. Right? Likewise, every investor, they have a separate or distinguished investment strategies. By using these investment strategies, what they are doing is they are segregating their current funds among different assets. What's their main objective? Always, how the investors can increase their wealth, they can increase the expected returns. Expected return. Always their perception is having high return, high expected return, sometimes high dividend, sometimes the high capital gain. That's why the person who talked previously, she explained that she is not going to sell the asset, sell the shares. Why? She is keeping the shares for a capital appreciation. So therefore, all investors, most of the investors, they are expecting a high return. Plus, it might be dividend or the capital gain. Plus, always investors are trying to mitigate the risk. So therefore, we can identify the two objectives of the investors are minimizing the risk as well as the expecting a high return. Right? With this, the objectives, what they are doing is they are making their investment. But these are a little bit contradictory. They have to manage those two objectives. Right. Okay. So with that, we can identify there are some, for the investment behavior, we can categorize the investors based on the several classification, right? Based on the risk perceptions and the return perceptions, we can identify the two set of investors called as the risk averse investors and then the non-succession investors. Right. For identical risk characteristics, right? Identical means same risk characteristics. For example, there are some stocks which have the same risk, same industry, same macroeconomic threats are there, same microeconomic threats are there. That means identical risk characteristics. If there are identical risk characteristics, investors tend to select an investment which generate the highest expected return. Same risk. There are two stocks which has the same risk. And then if it is so, some investors, they always try to acquire or else they try to purchase a highest expected return share. We call that kind of investors as non-succession investors. Non-succession investors. The other way around, what do you mean by risk-averse investors for identical expected return levels? Return levels are similar. If there are two stocks which are having the same return levels in that stock, right? Investors, there are some investors always who try to purchase the minimum risk share or as minimum risk investment. we call them as a risk averse. They don't like the risk, right? So therefore, always they are trying to purchase a least level of risk share, right? Whereas non-succession investors, always they are trying to have a high return investment for the same, which are having the same risk characteristics, right? Right. So because of these, the behaviors, always investors are trying to construct a portfolio. Why this is? Just assume you have a 2 million, right? You have a 2 million, you have invested in the Sampath Bank, and the other one you have invested already in the Sampath Bank. Right. What you can do is you can, rather than giving the full effort in the Sampath Bank, right, or else rather than allocating entire funds in the Sampath Bank, you have the chance to invest that the remaining 1 million or 0.5 million in the other industry, hotel industry. Right. What's your expectation is, once you are, if you are having a loss from the Sampath Bank, or else if you are having a loss in the banking industry, you can profit via the hotel sector, investment in hotel sector. What is the purpose of this acquisition of 2 shares? If you are suffering a loss, it can be recovered from the other industry. But unfortunately, if you have invested in the if you have invested in only the bank industry, the full amount, rather than allocating 1 million to bank and 1 million to health sector, if you have invested entire amount in the banking industry, if the banks collapse, what happened? Your entire investment is in a difficulty, right? So therefore, the investors, the rational investors, they are trying to make a different investment by allocating their funds, which is called as portfolios, right? Which is called as a portfolio, right? By constructing portfolio, investors are expected to reasonable return while reduce the potential risk. As I explained, sometimes you what you can do, what is the purpose of the purpose of the portfolio is mitigate the risk up to some level, right? Mitigates the risk up to some level, and then while mitigating the risk, you can have a reasonable return from then 2-3 investments, right? So therefore, we'll start the portfolio evaluations. Portfolio evaluation. In simply, if an investor invest in 2 or more securities, how we can calculate the entire portfolio return and risk. That is our lesson today, right? In the previous lesson, what we have discussed, if you invest in one stock, what would be your return and risk? Now we discuss, if you invested more than one investments, right? What would be your return and risk? Right. Before moving to the portfolio, we have to identify the weight of the portfolio. Fortunately, for your level, we are considering two investments, right? 2 investment in portfolio. That means investment in only in your portfolio, for your syllabus, in your portfolio, you have only invested in 2 shares. We are not combining the other securities, just investment in shares. If you invested in 2 shares, how we can calculate the return and risk? So then the first task of calculating the risk and return of this portfolio is calculating the weight on the portfolio. Right. In the given example here, there are 4 portfolios. There are 4 portfolios. In the portfolio number 1, I have done the allocation 10% for A. Allocation for investment in A, that is 10%. Allocation in B, if it is 10%, the allocation in the B is 90 rupees, this one, right? And then the other one, there are portfolio, the other one, Portfolio number 2. We'll take an example. Hassan. Hassan constructed portfolio number 1. He has invested in A 10%. Meanwhile, according to his intuition, he decided that most favorable one for him, and that is the B. That means accordingly, he made the investment in there 90%. Right? එයාගේ අතේ තියෙන එකෙන් 110ක් දැම්ම නම් ඒ වලට ඉතුරු 90ම දාන්න කාවටද B ට. Right. Okay. Just assume we have 1 million. We have 1 million. So then 1 million, out of that 1 million, Hassan included 10% on A. 10% means 100,000. 90% means that is 900,000. 90% means that is 900,000. Second one. Second one, portfolio 2. Right, portfolio 2. K-Mani. Right? K-Mani construct the portfolio 2. Her 1 million has been allocated for 30% on A and then 70% on B. If it is so, she has invested 300,000 in A and then she has invested in B, that is 700,000. Portfolio C, you all have 1 million. Shehan. Right?
It's Leo.
Huh? Yes. Any questions? Okay. Portfolio C, 50%. So then out of that 1 million, the Shehan has invested in 500,000 in the A. Meanwhile, 500,000 in B. Fourth one, portfolio 4. Right? I can't remember your names now.
Leo.
Leo. That is what you have told previously, neda?
Yes, madam.
Leo. Wala අහගෙන ඉන්නවනේ හරිම සතුටුයි මට. Shall I ask you to switch on your cameras? උங்க කාලෙකින් වල දැක්කෙත් නෑ.
No, madam, no.
Right. Anyway. Okay. We'll ask that one later on. ඒ නිසා පොඩ්ඩක් ඔය ගසල කරලා හැත්තලා හිටියා නම් හොඳයි. හොඳයි තව ටිකකින් මම on කරන්න කියනවා. ඒ නිසා ඔය නිදාගෙන ඉන්නේවා හැරගෙන ඉන්නේවා ඒවා පොඩ්ඩක් fix කරගෙන ලෑස්තිලා ඉන්න. හොඳද? හරි. Okay. So then Leo. Leo 1 million. Again, he is having 1 million. Then 60% invested in A and then B 40%. That means 600,000 here. And then the 400,000 here. Right? 4 investors. Hassan, Hemani, and then the Shehan and the Leo. Right? So their allocation is different. Right? This allocation on these 2 stocks, we call it as a weight on. Right? So this is named as W. WA weight on A and then WB weight on B. This is what you need to understand first. Right? Before moving to the portfolio risk and return, the first task is you have to identify the weight on each stock. Right? Weight on each stock. Here we have 2 stocks. WA in the first portfolio, that is 10%, and then WB, that is 90%. Right? Regarding the WA second portfolio, that is 30% and then 70%. This might be noted as 0.1 or else 0.9 also. Same, 90% or else 10%. Right. I hope you can understand the basic concept weight on the portfolio. Hope it is clear. Right. How we can erase. Now, with that knowledge, we'll move to the calculation of return of the portfolio. Right? Return of the portfolio. Now, if you have invested in a one stock, you are getting a entire return on that investment. Right? If you have invested in a one stock, now you are getting the entire return on that investment. But fortunately, you have invested in now two stocks rather than a one stock. If it is so, are you getting the full return from that investment? Yes or no? No. You are getting the proportionate return on that investment. How we can identify that proportionate or else weighted investment return? You have to multiply the individual return on the weight of that investment. Right? Individual return on the weight of that investment. I can annotate. Okay. Okay. You have invested in the A and B, right? A gives us 10% return. A gives us 10% return, right? Return is 10%. B, investment in B, shares B, it gives us now 15%. Return 15%. Expected return is 15%, right? If you have invested in only A, you can get entirely 10% return. But if you have invested in entirely B, you can get only 15% return, right? Which is higher than the A. So then, but as a portfolio, now you combine these two. By combining these two, you have gathered a portfolio, you develop a portfolio with the A and B. Now, how you can identify the return of these two stocks? Just assume the weight on the A. Based on your funds, you have give the weight for the A, that is 40%. 40%. For the B, your fund allocation, weight on B, WB. Weight on B is now it should be, if it is 40%, if WA 40%, WB should be 60 definitely. 60%. Now, tell me how you can calculate the return of this portfolio. Yes, how you can calculate? You have to take now, you are not, if you have combined these two, if you have combined these two, now you are not getting the 15 and 10% entirely. You give it or else you receive it proportionately. So therefore, you need to combine the A return plus B return. If we calculated it as a 10 plus 15, 10 plus 15, and then we mark it as a 25. Is that correct? If you mark it as a 25, is that correct? No. Why? We have proportionately invested, right? We have proportionately invested. So therefore, weight on the asset A plus weight on the asset B needed to be considered when we are calculating the portfolio return and expected risk. First, we'll calculate the return, right? Okay, I will just show you how you can calculate the return. Portfolio expected return equals portfolio expected return equals sum of returns or a sum of weighted return. Sum of weighted returns. How we can identify this weighted return? Now we have two weights, WA multiplied by return from A, or else you can name it as a ER, expected return from A, plus. Now we have two stocks, so therefore we have invested in stock B also, WB. From the B, now we are not getting entire the expected return. It is proportionately receiving to us. Therefore, you have to multiply it by the expected return from B with the weight of it, right? So then we write it as a sigma, right? Sigma expected return expected return of the stock I. We don't know it, so therefore we can write it as a I, or else you can write it down in example A. Multiplied by weight on A. Not just the A, we take it as a sigma. That means we have the other stock as well. So therefore, you can write it down as a sigma. If we have 3 stocks, you have to combine 3. If you have 4 stocks, you have to combine 4. Likewise, what we are doing is we have to first calculate the weighted return and then take the summation of these weighted return in each and every the investments. Right. So in our case, we have 2 shares. So therefore, we have 2 weights, weight A and weight B. And then we have 2 returns, weight on the expected return on N A and then the other one expected return on B. Right. So we'll calculate the return for our given hypothetical example. Right. Weight on A, that is 0.4. 0.4 multiplied by, we have received the investment, we are receiving the return from that one 10%. That means 0.1. Since we have 2 stocks, you can add the other stock return, weighted return on the other stock also. Weight is 0.6. That means 60%. The investment return is 0.15. So this is how we can calculate the return from the portfolio if you have invested proportionately on these 2 assets. What's the value of the portfolio? 0.4 multiplied by 0.4 multiplied by 0.1 and then that is the 0.04 plus the other one 0.6 multiplied by 0.15, 0.6 multiplied by 0.15, that is 0.09. So the entire portfolio return, how much is it? 13%, right? 13%. So this is how we can calculate the portfolio return. This is how you can calculate the portfolio return. Any question on this one? If you have questions, you can ask. Okay. Hope you don't have any question from the portfolio return. Right. Then we'll move the portfolio risk. Right. Risk also the same. Right. Portfolio risk also the same. In the previous, if you have invested in one share, now you are getting a risk. And then if you have invested in the two shares, now you are not getting the entire the risk that you have identified in the one previously in the one stock. Now you are getting the weighted risk. Weighted risk. Previously we had high risk. Now we have in the little bit low risk since we moved the two stocks. But right, portfolio risk not entirely depends on the variance of the two securities. Right. It is having it's going to have other impact also, which is coming under the covariance, right? What is that? The portfolio return is definitely because of the two weighted returns. But portfolio risk, not only the two weighted return, not only the two weighted risk, it affected by the directional relationship between two stocks return. Right? So therefore, covariance is also playing a critical role in calculating the portfolio, portfolio risk. Why this is, even we have identified in the weighted risk, weighted return on the portfolio return, in the portfolio risk, we are receiving the weighted risk. That's okay. Plus, we are having the this weighted risk might be affected by the directional relationship between two stock security, two returns of the two securities. Right? Sometime if the number of the portfolio, the number of shares increases in the portfolio, right? What happen? Once the share price increase in the stock number one, the other share price might be dropped. Again, third share price again increasing. Fourth share price again decreasing. Likewise, there is a relationship between these stock returns. It's also leading for the risk. Leading for the portfolio. So therefore, we have to identify the covariance term in the portfolio risk calculation. Right? In two security portfolio, there are two weighted variance terms, and then the two weighted covariance terms, right? And then portfolio, if as a portfolio expand further to include all security, covariance clearly become a dominant factor, right? That's why I previously told you, if we are increasing the number of shares, the portfolio, the covariance among these various securities might be a critical or its dominant factor in calculating portfolio risk. Right. Okay. So then how we can calculate the risk of the portfolio? As you did in the expected return risk calculation, you have to follow the same procedures that we have mentioned here. Right? That we have mentioned here the first step. You have to first take the difference between expected results and the actual results under the different economic scenarios, different economic scenarios, and then you have to scared it. Once after you scared it, you have to calculate, you have to apply the probability levels of occurrence, right? And then calculate the individual securities risk. That is our first step, which is mentioned here under these two formulas. Right? Once after you calculated the individual risk of these securities or shares, you have to apply the double summation method, which is a portfolio risk calculation method. Right? Double summation approach identify the portfolio return calculation equals square root of, you can refer this formula now, square root of weighted risk of the security, i.e. weighted risk of the security J and then the covariance, right? Covariance. Accordingly, we can identify there are three terms, right? If we have the two stocks, we have three terms for the portfolio calculation. The first part, as we did in the return calculation, weighted risk. Weighted risk. So you can take the scared weight on the I and then variance of I. Multiply the variance of I, or else risk, you can take the scared value of the risk also. And then not only that one, you have the other security also. Therefore, you have to scared the weight on the J, the other security in the explanation, the security J, and then multiplied by the variance of J, or else scared the standard deviation of J, right? When I'm explaining these terms, I have taken I and J hypothetical the securities. Then among aragana තියෙන explain කරන්න නිසා. Right. Okay. So these are the two-way risk. Not only that one, we have a other factor which is identified the covariance part. Since we have two stocks in this portfolio, we take the number 2. That's a fixed one. If it is a 2 portfolio, right? And then we have two weights, right? Weight A, weight I, and weight J. And then by considering the covariance, this is covariance, that means directional relationship between two stocks returned. In here, the directional relationship between I and J needed to be considered. That's the third part, right? Take the answer and then square root of it. Square root of it gives us the risk of the portfolio. Risk of the portfolio. This is the double summation approach identified to the calculation of the expected risk of the portfolio. Right. So these are the sum of notations. Okay. Before moving to this part, we'll do the calculation. Now, this is the same example that we have conducted in the last week, right? Now, what happened? Rather than investing only J and K, we are going to construct a portfolio, right? Equally weighted portfolio using stock J and K. In the previous context, what did we calculated? If you only invested in J, your return will be 3.42, and if you are invested in only K, your return will be, I can't remember the real figures, 4.68. If you invested in J, this would be your risk and this would be our return. That is what we have calculated in the last week. Now, rather than investing in one security, now we have constructed a portfolio by investing these two securities equally. That means 50-50. Your weight on J is 50 and weight on K is 50, right? You can calculate the portfolio return and then portfolio risk. Calculate. Now you can apply the formulas and calculate the portfolio return and risk. දෙකේම ඉන්වෙස්ට් කරොත් 50-50 කොච්චරක් රිටර්න් එකක් හම්බ වෙනවද කොච්චරක් රිස්ක් එකක් හම්බ වෙනවද කියලා calculate කරන්න යන්නේ. Okay. Try to do it. I will give 10 minutes. This is very simple. If you understand the process very clearly, this is very simple. The calculation of the portfolio risk and return is very simple. First do it, defer your note, download your notes and go to the, I will just weave here the question. You can refer the formulas that you already written down, or else I have mentioned that I have included the slide lecture materials to the LMS. You can download the lecture materials and refer the formulas that I have given to you. first try to do it with yourself. So then I will develop your answers. No need to worry. First do it yourself. Okay. Have you calculated the portfolio return? We can apply the same formula, ne? What's the calculated portfolio return? Tell me the return from the J. How much is it? Return from J.
8.5.
Return from J. 3.4. 2. Last week we calculated. So this is what we have calculated. Neither. How much is it? Sorry. That is 4.68. The calculated return for the J, that is 4.68. Right. Are we getting entire 4.68? No, because why? We have proportionately invested in the J and K. So therefore, we are just receiving 0.5 out of that 4.68. The next one, we have invested in the K also. If we have invested entirely only K, that gives us the 3.42 return, but unfortunately or fortunately, we have invested only the 50%. That means 0.5. Right. So this gives us the both together gives us the expected return of the portfolio. Expected return of portfolio. So then expected return of the portfolio equals how much is it? Please calculate and tell me the return from the portfolio. Yes. What's your answer? Anyone who calculate the portfolio return? Without your answers, I can't go forward. That's why.
4.05.
4.05. 4.05%. Right. So if you have invested in for the two assets or else two securities, now you can get 4.05 return on this portfolio proportionately. If you have invested in proportionately 50-50. Right. Now we'll move to the portfolio risk calculation. Right. Portfolio risk. How we can start it is we need to already calculate the risk of the individual securities. right? Last week we calculated the risk of the individual securities, right? So this is our formula to identify the risk of the portfolio according to the double summation approach, weighted, scared, weighted on the I. In our example, we have I, we don't have I and J, we have the J and K. So therefore, scared, weight on the J and then variance on the J. And the other one, scared, weight on the K and then the variance on K. And then the difference with the covariance in between J and K, in between J and K, and then the weight on the J and weight on K. Weight on J and weight on K, right. So then the weight is 0.5. Weight on J, that is 0.5. 0.5 scared. And then variance on J, how much is it? Variance on J, calculate the variance on J. Already calculated, take the variance on J, how much is it? Yes? Calculated the standard deviation is 4.505 and then you can take the variance directly or else add the risk value also, right? And then weight on K again, that is 0.5 or else 50%. And then variance on K or else the expected risk scared value on the K. Expected risk is 4.67. So then scared value of 4.67 and on the K. Right. And the third part, that is the weight on K. Weight on K again 0.5 and then weight on K. Weight on J, that is again 0.5. And then covariance between J and K. We have calculated the covariance, that is 10.71. 10.71. Right. Anyone who calculated the expected risk of the portfolio, tell me the answer. Okay. Calculated the expected risk of the portfolio and tell me.
Om? Huh? Alanga tayo. Hanga pala. Huh?
Yes, calculate and tell me. Anyone who calculate the portfolio risk? Okay, you can calculate and tell me the answer. I'm waiting for your answer. I'm not going to calculate it. If you are not giving the answers, we can wait until it's like this. Otherwise, I don't know whether you are working or else not on these calculations.
2.273.
Good. What's the answer?
2.273.
2.73. Others? Any other answer? Okay, we'll ask from the students. Dilshani. Dilshani Rajapaksha. What's your answer, Buddha? Okay, raise your hands, those who have got the answer quickly. Quickly raise your hand, those who get the answer. Good. Only 5 students. 7, 8.
Chaturya, can you tell me the answer?
Nine students, only 9 students got the answer. Hassan, the answer is 2.20. 2.27. This is your answer. Out of 66 students, only 9 students got the answer. What happened to the other 50 students? Raise your hands if you got the answer. Otherwise, I can't understand whether you understood or else not. Maximally 10 students. What happened to other 56? Now switch on your cameras. I suppose you are not working. Only 16. Don't lower your hand. Just make it as raise your hand. Now you can switch on your cameras. 22, 24. Okay. Now lower your hand. Maximally 34 students got the answer. So then we can move forward. We can assume that 50% have been identified the concept well. So therefore, thank you very much. Now you can lower your hand. Right. So with that identification of the portfolio return and risk, now we'll move to the other way of calculating the portfolio return risk. Right. The important part of the portfolio calculation is covariance detection. Right. Last week we calculated the covariance. How we calculate the covariance? We take the summation of different differences in different economic conditions multiplied by the probability level. That is how we have calculated the portfolio for the return, the covariance amount, right? This is, I will show the calculation we made in the last week. So this is how we can calculate the covariance. I hope you all can see this one, right? The portfolio probability levels under the different economic conditions are multiplied by the difference between the expected return and the actual return of the J and K, and then multiply each and every item by item, and then we take the total that is called as a minus 10.71. That's the answer we got. Right. So then we can identify the method of calculating the covariance. Covariance equals, right? Covariance equal the risk of the individual securities multiplied by the correlation coefficient, right? Risk of the individual securities multiplied by the correlation coefficient. This is the P in between I and J, right? How we can calculate the correlation coefficient? And what do you mean by the correlation coefficient? We identify the coefficient of variation, we calculate the covariance, and then now we are moving toward the correlation coefficient, right? Covariance identifies the directional relationship of two stocks to return, and then correlation coefficient measures the both direction plus the strength of this co-movement of the two securities, right? Covariance measures the directional relationship between two stocks return directional relationship, either positive or negative, right? Inversely or positively related. But correlation coefficient statistic measurement have the chance to identify both direction plus the strength of that co-movement, strength of that directional relationship, right? Of two assets returns. How we can calculate the correlation coefficient? Covariance in between these two assets should be divided by multiplying the securities, individual securities risk levels. Right? So therefore, covariance I and J between I and J divided by risk of the I multiplied by the risk of the J, two securities, it gives us the correlation coefficient in between the I and J. මේ දෙන්න අතර තියෙන සම්බන්ධතාවය කියන්නේ J සහ K J සහ I කියන hypothetical portfolio securities වල තියෙන සම්බන්ධතාවය සහ කොයිතරම් දුරකට කොයිතරම් දුරකට වෙනස් වෙනවද කියන එක සහ ඒකේ strength එක කොයිතරම්ද කියන එක. කොයි වගේද වෙනස් වෙන්නේ? කොයි වගේද වෙනස් වෙන්නේ සහ කොයිතරම් දුරකට වෙනස් වෙනවද කියන එක තමයි අපි correlation coefficient එකකින් identify කරගන්නේ. covariance එකෙන් identify කරගන්නේ co-movement එක විතරයි, direction එක. positive or negative කියන එක විතරයි. හැබැයි correlation coefficient වලට ඊට වඩා එහාට ගියපු numerical measurement interpretation එකක් දෙන්න පුළුවන්. So then we have the other method of calculating the covariance. That's the first formula. Covariance equal. If we derive the covariance from the correlation coefficient measure, that means here. If you derive the covariance with the correlation coefficient measure, it gives us I. That means the risk of the I multiplied by the return of risk of the J and multiplied the correlation coefficient matrix, right? So this is the other way of the calculating the covariance. Now, with that information, we'll identify the positive and negative relationship later on. And then with that interpretation for the covariance, you can rewrite the formula. Right, you can rewrite the formula for the portfolio calculation, that is the expansion of covariance here. In previous formula, what we have taken the covariance multiplied by the weight on the individual security. This is what we have written down previously. Covariance. Now, since we have already calculated the covariance as minus 10.7, we directly applied it. But calculation of covariance it's a little bit having the several steps. Since like that, if some questions might be given you the correlation coefficient of the two assets. In that sense, you don't need to again calculate the covariance between two stocks. You can just apply this formula. That's the expansion. Right? What we have done here, we have expanded the covariance formula. This part, we have expanded. This is equal to covariance. INJ. This is the covariance in between I and J. Right? The way how you are calculating the covariance is the risk of the asset I multiplied by the risk of the asset J multiplied by the correlation coefficient of the two stocks I and J. Right? Okay. Now, for the given calculation, you can calculate the correlation coefficient first. How you can calculate the correlation coefficient? Okay, do the correlation coefficient calculation for the given question. Quickly calculate correlation coefficient. How you can calculate the correlation coefficient? Covariance divided by the individual securities risk. Covariance is minus 10.71. Minus 10.71 divided by minus 10.71 divided by 4.505 multiplied by 4.67. Okay. Now calculate the correlation coefficient and tell me the answer. Okay. What's the value? What's the correlation coefficient? I'm waiting for your answer.
Minus 0.509.
Minus
Minus 0.509.
509.
Yes, ma'am.
Okay. Others? Same answer or different answers?
Same answer, madam.
Same answer.
Same answer.
Same answer. Right, good. Now the indication is minus, right? For the covariance also, we got the minus. What do you mean by minus? Negative or positive? Yes, minus means negative relationship. Minus means negative relationship. Plus means positive, right? Or else that means if the one variable's return is increasing, the other return also increasing, right? Negative means if one increases, the other one decreases, right? In this particular example, the relationship is inverse relationship or as negative relationship, which shows that when the security J return increases, the K return decreases, or else the other way around, once the K increases, J decreases, right? Inverse relationship. Both metrics, correlation coefficient plus the covariance, confirm that negative relationship, right? Correlation coefficient, if it is a +1, we identified that that is a perfectly, okay, we'll cover this line. If it is +1, we identify that that is a perfect positive relationship, +1. What do you mean by perfect positive? Perfect positive, the same ratio to the changes or as to the increasement apply to the, in a one variable is applied to the other variable, right? The proportionate change in one variable equals to the other variable in a positively manner, right? That means if the returns of the J is increases by 10%, the K also increases by 10%. Perfectly positive. Perfectly negative means if the one stock return decreases by 10%, right? The other stock return increases by 10%. Then the proportion is similar but the relationship is inverse or as negative relationship, right? If the correlation coefficient is a 0 once, right? We assume that there is no any linear relationship between the two stocks return. But if it is a 0, no relationship or else no linear relationship between two stocks return. Right. In between the perfect negative and perfect positive, there might be some cases negative and positive. Negative and positive. If it is positive means it should definitely in between 0 to the plus 1. It should be in between 0 to plus 1, and if it is a negative one, it should be in between 0 to minus 1. Right? So if it is, so there are no any perfect positive or negative, but there are some negative or positive impacts. In our example, that is minus 5. Right? That means no any perfect positive relationship, but there is a moderate negative relationship in between the I and J. There is a moderate negative relationship between the J and K. Sorry, not I and J, that is J and K. Right. Now, based on the calculated value, again rewrite the formula for the portfolio risk and calculate the portfolio risk. But our expectation is to calculate the portfolio risk with the correlation coefficient. How you can do it? How you can do it? අපි මේ කතා කරන්නේ මේ covariance එක expand කරලා තව විදිහකට මේ portfolio return risk එක calculate කරන්න පුළුවන් වෙන එක ගැන තමයි මේ calculate කරන්නේ. Right. This is the method number 1. Now method number 2. Method 2. Again rewrite the formula. Same figures, but the co-movements are different now. We have taken the covariance. Rather than the covariance, we have taken the correlation coefficient. Our calculated correlation coefficient is minus 0.509 plus to calculate the covariance, we need to incorporate the risk of the individual securities also. Risk of the individual securities 4.505 multiplied by the other one 4.67. Now you can calculate the portfolio risk again. The 10.71 has been taken by expanding the correlation coefficient and individual securities that we have calculated here. මේ 10.71 ගන්න පුළුවන් තව විදියක් තමයි අපි මේ බලන්නේ. Right. Okay. Calculate it and tell me the answer quickly. Yes. What's the answer?
2.27.
2.27. Right. That means you can observe that you are getting the same answer, right? Even you have taken the covariance directly or else the measurement of the covariance with the involvement of correlation coefficient and the individual securities base, you are taking the same answer, right? So this is I want to explain you. If you have any questions regarding this one, now you can raise. The method number 1, we have calculated the expected risk of the portfolio with the covariance directly. Right? Method number 2, we expand the covariance formula and we have calculated the covariance of these two stocks return with the correlation coefficient and then the risk of the individual securities. Right. If you have any questions, now you can raise. Right. Right. Now we'll move to the explanation with the correlation coefficient. Right. So now we are identifying the diversification impact. If correlation coefficient is -1, right? -1 means the one stock return increases, the other stock return decreases with the same figure, right? If it is so, we can identify a perfect diversification effect generated in our portfolio, right? Why it is? Because the return, if the return of the stock Sampath, let's take Sampath Bank. If it is the correlation coefficient of these two securities is -1, reflecting if you have invested in Sampath Bank, if the Sampath Bank return is going down, definitely the return in the other stock is going up with the same figure. So therefore, it is worthwhile to make that the diversification. Why? One return stock will be dropped in the one return stock will be recovered by the other stock entirely. But if the correlation coefficient is +1, that means if your Sampath Bank return is going down, the same time the commercial bank also return going down. If it is so, there is no any diversification effect generated. That means even we have form a portfolio, no any impact of the portfolio, right? If it is no any relationship between two stocks return, we can identify that as a moderate level of diversification impact generated. So therefore, if you ask about the portfolio diversification impact, you have to consider the correlation coefficient of the portfolio in between these two stock return, and then you have to provide the justification. Right. So this is what we need to study in the portfolio formations, risk and return. Now you can have a 5 minutes break can come. We'll move to the systematic risk and the unsystematic risk. Anyway, Shall we go to the quiz today?
Okay, ma'am. Madam,
Yes, Sasan. Tell me.
what is the time duration?
30 minutes. Is that enough?
Calculation හදන්නත් තියෙනවනේ.
Eh?
එතකොට 30 minutes calculation හදන්න තිබ්බොත්.
එහෙනම් පැයක් විතර දෙන්නද question 10කට?
ආ
ඒකටත් ආද? බෑ විනාඩි 30යි දෙන්නේ. විනාඩි 30ක් ඇතිනේ. 10ම හදන්නත් නැහැ. විනාඩි 30කුත් වැඩි. විනාඩි 25ක් විතර දෙන්න.
අම්මෝ මිස් ගිය පාරත් තේරෙනවා ගාන රූල් කරලා ඉවර වෙද්දි විනාඩි 5ක් තියෙනවා කිව්වා.
Teacher,
ඒ
no
මොකේද?
need.
අපේ පස්සේ මුකි.
ඔයාලා කොපි කරනවනේ.
මිස් ගෙදරනේ මිස් ඉන්නේ. කොහොමද කොපි කරන්නේ?
අම්මෝ එහෙනම් ඉතින් ඔයාලට සෑහෙන සපෝට් එකක් ගන්න පුළුවන් නේ ගොඩක් දේවල් වලින්. එහෙම කරන්න බෑ. එහෙම කරොත් වැරදි ආන්සර්ස් තමයි එන්නේ ෆයිනෑන්ස් එක. right.
Madam, 1 hour එපා. 45 minutes okay.
බෑ විනාඩි 30යි. විනාඩි 30 හොඳ ඇති. විනාඩි 30 ඒවා ලේසි questions තියෙන්නේ. Okay, we'll start. Now the students are logging to the session. And a lot of students log into the session. I don't know why. Anyway, that's a good strategy to collect the students for the lecture. Right. Have you noticed that? So when we are calculating the risk of the portfolio, right? Even we try to increase the number of securities in the portfolio, definitely there might be a risk. Right? Even we increase 2 to 3, again, there is some kind of a risk. Even we increase the 3 to 20 securities in our portfolio, we have to recognize some sort of a risk. We can't mitigate that risk, right? Even by constructing a portfolio, our perspective is to mitigate the risk or else to minimize the risk. We can minimize the risk, but we can't mitigate the risk. Why? Because of these two risk levels, right? So there are some risk, we call it as a systematic risk and the other one unsystematic risk, right? What do you mean by a systematic risk, which is a non-diversifiable risk, right? We have a non-diversifiable risk. That means systematic risk created because of the macroeconomic factors. An example, unemployment, right? Inflation, changes in interest rate. Because of these factors, macroeconomic factors, each and every investor in the investments who have invested are facing these risk, which is called as systematic risk. Even we increase the number of portfolios in securities 2 to 3, we can't mitigate that risk. 2 to 5, we can't mitigate that. We have invested in Sampath Bank and this commercial bank because since we want to mitigate the risk, we increase the number of shares in the HNB. We have a new investment in HNB. And then we have a new investment in the Pan Asia. Same industry, but we can't mitigate the risk. Why? The specific banking industry is facing the inflation rate, the macroeconomic factor, macroeconomic risk. Sometimes they might be facing about the interest rate changes risk. Again, same to each and every bank. So therefore, even we increase the number of securities in our portfolio, we can't diversify this systematic risk because of the macroeconomic factors. It is an unavoidable one. The other is unsystematic risk. Right? Unsystematic risk, which is identified as a diversifiable plus it's a firm specific risk. There are some micro level factors which are impacting for the portfolio. Right? What are those? For example, the management issues. Right? We have identified that okay, there are some management issues in the Sampath Bank. What we can do? You can take off your investment and then you can investment in the commercial bank. You got the idea or else you got the news in the near future Sampath Bank is not going to distribute the dividend for the next 5 years. What you can, because of their inherent the finance issues, the finance risk, or else the very bad management, because of that bad management, inefficiencies in management. What you can do? You take off your investment and you invest in the other banks, right? Or else you can reduce that investment amount and then you can take some amount and then you can invest in the other banks or the commercial bank, whatever the banks. What is that? So those are the you got the news and then you change your investment to the other one.
Excuse me, miss. The screen has not been shared.
Sorry. Thank you. Okay. So this is what I'm referring to. So because of that microeconomic factors, the companies are going to have some risk. Meanwhile, the investors also are going to have the risk. But if you're changing the number of shares in that particular organization, what you can do is you can mitigate the firm specific risk. So therefore, we identified the unsystematic risk, which are because of the firm specified factors, is an avoidable risk by changing the number of shares, number of securities in your portfolio. If we graphically illustrate this, the portfolio, the systematic risk and the unsystematic risk, this axis shows us the market risk, the portfolio risk. Meanwhile, the other axis shows us the number of securities in the portfolio. You can see here that So even we have the 1 security, 2 securities, 3 securities, we can't change the systematic risk. Same rate, same market risk is faced by these investors, which is because of the systematic risk. Even they have even they are increasing the number of shares in the portfolio. But regarding unsystematic risk, right? Unsystematic risk can be avoided by increasing the number of shares in the portfolio. So therefore, what happened? It's going to be reduced once you are changing the number of stocks in the portfolio up to certain level, not entirely, right? So this is the graphical illustration for the systematic risk and the unsystematic risk. Right. So then we'll move to the capital asset pricing model. Right? Capital asset pricing model is a very vast area in the investment management, the management subject. Right? So we have even we are identifying this lesson as the one lesson under your business finance subject. So this lesson might be a other subject in the other course disciplines. Right? So therefore, in that, we are identifying the capital asset pricing model in deeply. But for your level, we are not going to identify the capital asset pricing model in deep manner. Just we'll identify what you mean by the capital asset pricing model, right? So this is a model, right, where it gives us the required rate of return and the risk, beta risk relationship all assets when they are held in well diversified portfolio either efficient or else not, right? So in the investment management we identify the well diversified portfolio and efficient portfolios and inefficient portfolios, right? Portfolio means the well diversified means we are combining the risk-free securities and risky returns and risky securities, and we'll have a portfolio on that one. But for your level, we just identify the 2 securities without considering the treasury bills and the risk-free securities. So this model gives a clear relationship, clear understanding regarding how the risk and return are changing or how behave the risk and return interactively if the portfolio is not efficient or is efficient well diversified portfolio. Right. Plus the other one security market line, it is also the given as the relationship of the all assets which are the either efficient or else not. Right. Okay, based on this capital asset pricing model, we can identify that the calculation of the expected return of the investment, right? The calculation of the expected return of an investment equals risk-free securities plus, and then the other one, beta adjusted market risk premium, right? So beta means we can identify the how much of investment moves with the market, right? We'll identification of the beta here in the next one next. Okay. So stocks beta coefficient, right? Beta coefficient measures of contribution to the risk of the portfolio, and then beta is the correct measures of the stock's return. And then, so we can identify the measures, the stock volatility relatively the market, right? Beta also measure what? The stock's volatility, the changes in the changes in return relative to the market, right? How we can calculate the stock beta, the difference, the coefficient in between two stocks return divided by the reciprocal, the security calculated for the beta. So therefore, in this example, if we have taken the two stocks I and J, if we are calculating the return, the stock beta value for the I, you have to divide the covariance by the other asset in this portfolio. The other asset is J, squared value of the risk of the other asset that you have invested, right? Okay. So with that basic knowledge regarding the beta measures, the capital asset pricing model identified the expected return of the investment. Definitely, it should be higher than the risk-free security rate investment. Risk-free security investment return rate. Right? How we can identify the individual's expected the return? It's the risk-free, at least the investor is expecting risk-free rate, at least. Plus, we need to identify the market risk premium adjusted with the beta measure. Right. How we can identify the market premium? The difference between the overall, or is the difference between expected return of the overall market minus the risk-free security. Right, that is called as a premium. We have to offer the premium, a beta adjusted premium for the investors as their as their return. So therefore, beta adjusted risk premium should be added to the risk-free return. Then the investors in the market are expecting that much of return if it is according to the capital asset pricing model. That's another discipline, the model that we are trying to identify the expected return of the investment. Right. Okay. You can do the example. Suppose that the expected return of a treasury security is 8% and then the expected return on the portfolio that is the 13% and then beta or as the beta of the Sage PLC is the 1.3. Find the required rate of Sage PLC. Right, how we can do it? Expected return equals the risk-free return, that is treasury securities return 0.08 should be added to the market premium, the market premium adjusted beta, and then market premium is how we can beta is given here 1.3 and then we can identify the expected return on the market portfolio that is 0.13 and then how we can identify the premium minus 0.08. That is what we are giving for the risk-free securities as a return. You can calculate the risk-free return, return rate of this investment. Zero point 0.13 minus 0.13 minus 0.08. The answer is 0.05. Answer should be multiplied by the 1.3. That is 0.065. Add that one 0.0858. That the answer is 0.145. That means equals to 14.5%. Right. 14.5%. That means required rate on this investment on the Sage PLC, that is 14.5 by the investor. Right. Okay. This is how we can calculate the return for the portfolio if we have combined both the risk-free securities and the risky asset. In the previous calculation, what we did was we identified the calculation of risk return on the investment if we have only invested in 2 securities. Now here risk-free asset plus the risky asset investment portfolio. Right, just a small part of the portfolio theories and as per the capital asset pricing model. Right. Okay. With that, we can conclude our lesson for the portfolio. What we did was portfolio security risk and return calculated today. And then before moving to today's session, we have just calculated the risk and return of the individual securities. And the last part, we have a just idea about the capital asset pricing model return calculation. Right. So these are the some of things that we are referring to your the risk and return lesson. Any questions? Okay. Hope you don't have any question. So then we can go to the quiz today. It's a 30 minutes quiz. Since we have started it late, we can have a 15 minutes for your quiz and wind up session. Before moving to that one, first we'll mark your attendance. So that's the best strategy. So therefore, we'll first mark your attendance and then have your quiz. Okay, before moving to that one, I just divided you into groups. Have you noticed that group? Since you asked to divide the group by myself, I divided you into groups. Did you identify those groups? And have you started your work assignment?
For group assignment, madam.
Oh,
Yes, madam. Yes, madam.
group එක හොයාගත්ත නේද? Group A, B, C, D කියලා ඔයාලට group J වෙනකන් තියෙනවා. I forgot to ask that one in the last week. ඒ group එකේ members ලා ඉන්නව නේද?
ඔක්කොම නෑ.
ඔක්කොම නෑ කියන්නේ. සමහරු ඩිග්‍රී අතහැරලා දාලා ගිහිල්ලා එහෙමද?
Don't know, madam.
එහෙනම් you can mark your attendance.
Hello, madam.
Yes, Pata.
Madam, at what time we can access to the quiz?
Okay, I will not notice that one.
Okay.
Your time duration and the other one I will notice that one. You will given the 30 minutes once after you started the quiz. Did you all mark your attendance? Okay. Hope you don't have any question on the marking your attendance. "85 students mark their attendance. But 75 students are here now. Okay, now we'll check. Huh? I will call your name so then you can mark it as a present, or else you can tell me that present, right? There are 74 students, but the count is 85. It can't be happen, no. I'm conducting the lectures for the online. I'm conducting the quiz for the online platform. Sometime it might be easy for you. Right? So you are taking the unnecessary advantages from that one. Okay. Aki 003.
Present, ma'am.
008.
Present, madam.
85.
Present, madam.
87. 87.
Present, madam. No.
87. Present.
Oh, we know.
56. Ahmed. 16.
Present, madam.
5 absent. 57. 57. Anthony. 19.
Present, madam.
11. Weekend 1.
Present, madam.
57. Are you present or else absent? Right. 001. Okay. 006. Exception
Present,
006. Okay. 17. Weekend 17.
Present, miss. Present, miss.
Okay. Weekend 089.
Present, miss.
75.
Present, miss.
26.
Present, miss.
11. Exemption 11. Exemption 11. Weekend 91.
Present, miss.
Exemption 28. Exemption 28. Chanaka. Right. 24. MOH 24. Imodya. Dayanand.
Present.
7.
Present, madam.
30. 18C
Yes.
exemption.
Present,
Okay.
madam.
Weekend 27. Absent. Eh? Weekend 81.
Present, madam.
003.
Present, madam.
9. Weekend 9.
Present, madam.
Weekend 36.
Present, madam.
29.
Present. Present, madam.
Excuse me, madam.
Okay, Anvita. 14.
Some students can't on the mic.
Okay, but they can raise the hand. No? Those who raise the hand, I mark their attendance. Especially 57, I mark their attendance. 004 මම නම කිව්වට පස්සේ මාක් කරා නම් හරි පුතේ. නැත්තම් මට එහෙම මාක් කරන්න බෑනේ. දැන් ඔයා රේස් කරාට හෑන්ඩ් එක මම ආපහු නම කිව්වට පස්සේ මාක් කරන්න. රේස් කරන්න. එහෙම නැති වුණාම මට හොයාගන්න බෑනේ. right.
Teacher 14%.
14
Yes, TDS connect.
මං කිව්වේ නෑනේ නම තාම නේද?
You call my name, but somebody talk in between at the same time.
I mark you as absent. No,
TDS connect
Fernando.
14.
Exemption 14 no?
Yes, madam.
Yes, I mark it.
Okay, thanks.
Absent.
Okay, thanks.
So then 23. Exemption 23. Weekend 8.
Present, madam.
47. Weekend 47. Weekend 55.
Present, madam.
Galle. 55.
Present, madam.
Okay, 009. Exemption 009.
Present, madam.
Weekend 030.
Present, madam.
Weekend 031.
Present, miss.
72.
Present, ma'am.
63 absent. Huh? And then 70. Jasid.
Present, madam.
Jayanta. 41. Matisha. Oh, Matisha. 41. 27.
Present, madam.
18.
Present,
Weekend
madam.
18.
Present.
Exemption 20. Weekend 19. Weekend 19. Weekend 79.
Present, madam.
Weekend 39.
Present, madam.
Weekend 74. Weekend 74. Weekend 28.
Present.
Exemption 2. Exemption 2. Exemption 24 නෑනේ. Exemption weekend 51. Weekend 51. 26 absent. 48. Weekend 48.
Yes, present, miss.
Weekend 34.
Present, miss.
Weekend 30. Weekend 71. Weekend 71. Naufer. Kamashi, what is your index number? And then the weekend 66. Weekend 84.
Present, madam.
Okay, weekend 004. Janit.
Present, madam. Present, madam.
Exemption 003. Roshan.
Present, madam.
HRR Pereira.
Yes, madam. Present.
005. Weekend 005. Binara.
Present, madam.
78. Weekend 78.
Present, madam.
Weekend 69.
Present, madam.
Weekend 14. Weekend 14. Rashani Pereira. Weekend 20.
Present, madam.
Weekend 32.
Present, madam.
Weekend 18. Exemption 18.
Present, madam.
Weekend 58.
Present, madam.
Weekend 43.
Present, madam.
MOH 002. 18A.
Present, madam.
Randini. Chamodya.
Present, madam.
Okay. Weekend 80.
Present, madam.
Weekend 34 absent. Weekend 86.
Present, madam.
Weekend 54. Absent. Weekend 53. $53. 004 exemption.
Present, madam.
Bismarck. 21 exemption 21.
Present, madam.
Okay. 45 Sakuntala. Weekend 45. Deshani means what's your index number, Puta? I can't identify the weekend. Sakuntala absent. Weekend 12.
Present, madam.
Weekend 22.
Present.
Weekend 90. Situndi.
Present. Present.
Excuse me, miss.
Yes.
045 present. May mic on can't value.
Hari.
Also 051, madam.
Mokadda?
Also 051, Teshmi.
51. Hari. 90 okay, ne? 001. Exemption 22 okay, no? 77. Weekend 77.
Present, madam.
Weekend 82.
Present, madam.
24 absent, ne? 83. Weekend
Present,
83. Weekend
Present.
37.
Present, madam.
Weekend 6. Weekend 6. Lahiru. Wayada Buttawe. Lahiru. Weekend 61. Subat. Weekend exemption 29.
Present.
46. Weekend 46. And then the 38.
Present,
Weekend
madam.
38. Okay.
Present, madam.
Exemption 12.
Present, madam.
Weekend 88.
Present, madam.
Exemption 15. Dushan.
Present, madam.
Okay. Ravi India. Paniga Surya. 11. Weekend 11. Okay.
Madam,
17.
present.
Mokadda Puta?
Exemption 23%. Mark करो mic is on.
Exemption
23. 023.
කොහෙද මාක් කරේ කියලා හොයන්නත් බෑ.
Madam,
ඉන්නකො තව චුට්ටක් තව දෙන්නයි ඉන්නේ. මාක් කරලා ඊට පස්සේ බලමු අය. වික්ටර් මාරච්චි
okay.
35. Weekend 35. Madara. Oh, Madara. Okay, 76.
Present, madam.
Okay, දැන් කියන්න බලන්න. දැන් මාක් උන්න
Madam,
ඒවා කියන්න
Madam,
බලන්න.
there are three students,
Section
041, 41 and
එක්කෙනෙක් කියන්න.
006.
එක්කෙනෙක් කියන්න. මම scroll down කරනකොට
0
කියන්න.
0
මම දැන් scroll down කරනවා. එතකොට කියන්න ඔයාලගේ යාළුවන්ගේ ප්‍රශ්න තියෙනවා නම් ඉක්මනට කියන්න. හරිද? හරි. Uh, 56 and then 5 and then 11 and then 28 25 issues තියනවද? ඔයා මං හිතනවා ඔයාලට screen එක පේනවනේ. 25 28 11 and then the 05 and then the 56 they marked as the absent. Next lot. 27 and then the 64 and 92 and then the 23. Any issues?
23
23.
Oh.
Oh, 23 මම කිව්වද? Exemption 11 28 25 27 23 මම කිව්වේ නෑනේ.
කිව්වා මම
කිව්වා මැඩම්.
මොකක් කළා නෑ. 11 28 25 27 and then 64 92 23 හරිනේ. Fernando. Okay. ඊට පස්සේ 63 and then the 20 and 19 issues. No. 74 002 and 32
74 madam.
හරි. Okay. If you don't have any issues, you can lower your hand. Okay. And then 26, 71 and 66. 26, 71 and then the 66. Right, no issues. If you have any issues, please ask the others to please pass the message. See why you are, if you are raising your hands, it detects as your name. I can't identify the names here because the name with initials are mentioned here. Right. 41. Okay, next lot. And then we have the 54, 53, and then
Present, miss.
24.
Present.
24 the
53, 54 දෙකම present.
hello it's 24% Shadir
53 and 54 mark.
Okay.
Right. And then the 24.
yes yes
Present
miss
here.
yes Abdurrahman Shadir
Okay. 6 and 61.
Miss 6%.
61. And then the 46. 46 and the last 2%, 17 and 35. Okay. Issues? Any issues now? Okay. Hope you don't have any questions. Now we have 78 students. And then how many individuals are here? Can you please lower your hand?
Excuse me, madam. If you don't mind, there
Yes.
is one person, 041.
41.
Jayant.
Vidushan. And then the Taraka and Rajpaksha. 41.
Yes, madam.
41 marked. Jayant. කවුද විදුෂාන් කවුද මොකක්ද ඉන්ඩෙක්ස් නම එක විදුෂාන්ගේ? And Rajapaksha and the other person. What are your index numbers? Please ask the friends. Please pass the message to friends.
Miss, my attendance is okay with Dushan.
Then you can lower your hand, please. Okay. If you don't have any issues regarding the attendance, you can lower your hand. Vidushan and Deshani. Deshani, do you have any issues? And Lahiru. Lahiru Madushan. Right, okay. I hope you don't have any issues on the attendance. We'll check your attendance again. "70 students are here, but there are 80 people. That means including me, ne? Including me and the other one, the staff from the SAP campus, right? Okay, that means 78 here and 78 students are going to have the attempts. There should not be other attempts, huh? If there are any other attempts who are not marking their attendance, I will never give them the permission to do a quiz again. That means again continuous assignment 0. මෙච්චරක් දීලා හැම කරන්න හොඳ නෑනේ බෝල් කරන්න හොඳ නෑ ළමයි උනා. Right, okay, we'll start the quiz. It's 6:15. You can go to your LMS now. Okay, below the assessments, you can see your quiz. Check whether it is available. Is it available?
No, madam.
This is your quiz. Started with 6:17 p.m. and then you have 30 minutes. So then you can ended up with 6:47. Okay? Is it
Madam?
available?
Hello, madam. It's not available for us. Actually, by naming quiz one, it's released in May month. It's not showing for today. The quiz one is not showing for today. Quiz one
Yes, ma'am.
is showing for the May month only.
No,
the
no,
first
this
one.
quiz. Check whether they under the assessments. Here, below the assessment, the quiz number 1. Yeah, I will name it as a midterm. I don't know whether I can mark it.
Yes, ma'am, we can see.
It's available.
it's available.
Should be.
Yes, ma'am.
Okay, you can attempt it 6:17. You can finish it by 6:47. Right? The thing is, you have to do the calculation. Take now instructions. Right? Take a separate paper. right? Take a separate paper and then do the calculations. Do the calculations one by one for the question, the 10 questions. If there are theory questions, no need to do the calculation. You need to upload that the working sheet once after you submitted the quiz under the link below. I will create the assessment link here, right? Workings. Working for the quiz. Working for the quiz. Right? You can upload that workings to the LMS once after you submit the quiz. Within 30 minutes, you submit your quiz, and then meanwhile you are providing the answers, do the workings in the rough paper, and that rough paper should be uploaded to the LMS once after you ended the quiz. That means I will give the 5 minutes period you to upload the documents to the LMS. You can take a photo of that, the workings, and then that photo can be uploaded to the LMS. If you have the chance to convert that one to the PDF, you can upload that PDF, or else just take the photos and upload it to the LMS. Right? Once after, you don't need to wait until 6:47. Once after you complete your works, you do the uploading process. Anyway, you will given additional 5 minutes for that uploading process. There are simply questions and questions. ඒක කරලා ඉවර quiz එක submit කරලා 47ටම ඉවර කරන කෙනෙකුට විනාඩි 5ක් දෙනවා. එහෙම නැත්නම් ඊට කලින් ඉවර කරන කෙනෙක් ගාන බැලුවා, quiz එක බැලුවා, working එක කරා, ඒ working එක LMS එකේ upload කරලා තියන්න quiz එක ඉවරණු ගම. What I'm checking for is the workings, not the final quiz submission. So this is working for the quiz. Below the quiz, you can identify the working for the quiz. If you are submitting your quiz, definitely there should be a working. Right? Otherwise, I'm not accepting your answers. I don't need the clear-cut answer, the handwriting, but I need just the steps that you have followed. අස්සන්ට එහෙම ලියලා ඕනේ ගාන ස්ටෙප් එකකින් ස්ටෙප් එක හදපු විදිය පෙන්වනවා නම් හරි. Right. Okay, some of your students has been completed the assignment, the midterm, and they have only out of them, 4 of them have submitted their other workings. Huh?
Madam, where can I get the link for the upload the workings, madam?
Below the quiz.
Below the quiz. Okay, madam.
Yes, below the quiz. Okay, this is the place.
1 minute, madam. Okay, madam.
Yes, so this is below the quiz.
Working.
Mid quiz. Yes, working for the quiz.
Okay, madam. Okay. Thank you.
That's a compulsory one, no? If you don't have the quiz workings, we can't give the marks to you. Plus, you have the 482 attempts, but I'm only giving you allowing you the mark, the quiz mark. Those who presented or else those who mark their attendance. Others, they won't get any marks. They have to redo the quiz even they have completed it here. We have only marked the 78 students' attempts. There plus their attendance, no, but there are 82 students who are, I don't know whether you are taking 2 attempts. Anyway, there are 82 attempts. I don't know why, and then I will cross-check the absent or else the present list and your marks. And then I will remove the students who have not participated for the lectures and then not mark the attendance, but participating for the quizzes, I will remove their marks. They have to redo it. Huh? Okay, you have 2 minutes more to submit your workings.
Can you extend the time of working?
59. Eh? 59 uploaded their workings only, that means 69 and 79. No, you have the 78 students. No, you can do it within 2 minutes. No issues. Try to do it. If you won't be able to complete it, I will then consider your request to them.
Ma'am, I submitted the answer. Shall I leave it?
Yes, Sudha, yes, you can. Those who mark the attendance and the workings and then the quiz, complete the quiz, they can leave. Thank you very much for your participation.
Thank you, madam.
Okay.
Thank you, ma'am.
Okay.
Madam, is there any way to find out whether my workings are uploaded, madam? My number is EX27.
How it appears in your LMS?
1 minute, madam. The final, it says that edit submission and remove submission, madam.
What's your
That's
name?
all. DL Jayasinghe. 27, madam.
Upload it.
Okay, thank you very much, madam.
Okay.
Hello, Miss. Can I get confirmed that my working is uploaded?
How it appears in your LMS?
I renamed as 1 and 2.
No, in your LMS, how it appears, whether it is submitted or else not.
Error. It's saying there is an error.
What's your name? Last name?
Aryaratna.
Excuse me, miss.
Upload it.
019. 0
Oh, no,
19.
not uploaded. Let's see. Other area. Okay, re-upload it, please.
Excuse me, miss.
Yes.
I can't upload it, my working PDF.
Okay. Anyone who was unable to upload their documents?
Madam, I'm also here.
What's the issue?
It's saying it's already overdue within 5 minutes. Yeah.
I will give another 2 minutes. So then you quickly upload that one. Nah?
Okay.
I hope others, they don't have any issues. There are only two students who are unable to submit it. Quickly complete it
Excuse me,
in
ma'am.
2 minutes.
Hello.
Yes.
I can also can't.
Yes, do it within 2 minutes.
Okay, ma'am.
Madam, can't submit the answers.
Yes.
It's answer submission. I can't.
Have you submitted? If not, submit.
I not submit.
Okay. Please submit and finish your task at by 56, huh? 6:56. The 23 week, I can't do any submission to the LMS. You have to do it. You have sent me a mail, no? What's the reason? Because I can't do any LMS uploadings. This is the submission for the student. Lecturer can't upload it. Are you here? Mituni Nihara. Mituni, please upload that one to the LMS.
Madam, 070. Just I facing issue, madam.
What's the issue?
In the submission.
What is the issue? Is that you can't upload it, or else what is the issue mentioned there?
It's loading, buffering. Not
Time
uploaded. Please, can you extend the time one?
Okay. I will give another 4 minutes, because I have to finish that one by 7. Quickly upload, please. The person who sent the mail to me, you have to submit it to the LMS. Those who have marked their attendance and then the quiz and the upload the working, they can leave. Those who are having the issues, they can wait until others they can leave, please.
Thank you, ma'am.
Okay.
Now, okay, ma'am. Thank you.
Okay, Putta.
Excuse me, miss. Can I get confirmed that now my workings are submitted?
Yes, we'll see. Jayalat, no?
I'm
What's
I'm
your name?
019 Ari Ratna.
Now okay, ne?
Okay, miss. Thank you.
Okay, right.
Madam, madam,
Yes.
can you check 070?
Index last name?
Jasil.
No any submissions, Jasil. 70, no?
Yeah,
No any submissions.
I'm facing an error, madam. We're trying about 15 minutes to submission.
You send me the mail.